on this 11th day of September. That will be a painful day for a lot of people. And I actually didn't have a look, but I imagine there's probably some commemorative services going on in the States today. I'm sure Ash will bring me up to date with that. I'm not sure if it's a bank holiday. I think it is actually, but I could be wrong. I'll check on that, or if I don't, Ash will when he comes into the room. As I say, thanks for joining us. Let's get stuck into business and see what's going on around the place. As always, before we do, we'll go and have a look at the gold chart, see if we've got any reason to trade this today against the US dollar as London opens its trading session in approximately, 3 minutes from now. Righto, just make sure that we're streaming before we go any further. Interesting. Whoa. Okay, that's not what I wanted. Bear with me, guys. Okay. We are good to go. As I say, gold on the 1 hour chart is showing me a big range already today, having come off that base on an hourly chart and seeking the monthly pivot and these highs here. Looks a bit like a box range to me. And when it looks like a box range and it smells like a box range, then potentially it's going to be a box range. So this would be my upper limit. There's no way I'd want to trade through that today, given that the double top's there, the top of the box. If you can't see the box, I will insert that so it's quite clear where I believe we have a problem getting through there. So with the daily range being our second bar of the day, which is that one, I think, yep, it's the entire range of the last 2 days, really. 3 days, 3 days, I'd say. So do I really think that we're going to bust out of there without a bit of a pullback? Answer no. Other side of the coin, if we did get short, do I think that this is actually going short today? Well, the answer to that is no as well. And the reason I believe that is because of the dollar index. And if we have a look at the dollar index, I said this last Thursday, I think, and it, to my mind, was just a matter of time before this happened. And of course, we're now seeing that 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row is probably a bridge too far. At the moment, we have settled underneath this channel, or inside this channel, if you like. And I'm not saying for 1 second that price won't go to here. In fact, I'm disappointed, frankly, that we've gapped down this morning and continued on that path, because it looks very much like a false break is forming of this area. What I would much prefer to have seen is price go to the top of this range, match that high, then I could start looking for shorts. As it turns out, looks like they want to go now. That doesn't mean they will. And of course, last Friday's bar is a bit of a buying bar, and I still anticipate that the dollar will go up and test this 105.70 area or whatever it is and give me that double top. Then I'd look for lower high and look to trade it short. But I wouldn't be trading it short at the moment, even if that does set up as a false break tomorrow. I'd want to see a reversal before that confirmation. So it's just not there at the moment. For that reason, I am bearish still, everything against the dollar until we get to this area here. So with that in mind, let's go and have a look at the weekly game changer bars. And of course, as I say, there is no trade today on gold because of, that's the dollar index, sorry, because primarily of the situation that we're in. But at the top of the range, so I don't want to trade at breakout long because the risk, right, here's your entry here, which is where price is going at the moment, and here's your stop loss. So $12 gets you $1.45. No. And going the other way, $12 gets you $2.28. Doesn't make any sense to me. So for that reason, g'day, Paul Pete. For that reason, there will be no gold trade today. And as you can see by my box range, I'm expecting that we're going to fiddle around in here for a little bit of time. We shall see. Let's have a look at the I'll get that out. Daily game changer bars. And they are headed up by euro versus the pound. For those of wondering, for those of you, why am I talking so fast? Slow down. For those of you wondering why I have a bar chart up here, change of season. Really, whenever I have a change of season, I like to have a change of something. Is that a superstition? Well, yes it is. But I just like to change something. So I've done that. And with my analysis chart, not my analysis chart, that's not true. With my searching for chart patterns and game changes, I'm going to use this bar chart. I think it is a little bit better to get a good handle on, in particular, the structures that exist, and indeed the game changer bars, very, very easy to spot as well. That doesn't mean that I'll do a full analysis on these charts. It just means that I'm looking for market structure and game changer bars, and pivots don't count in that. So that's why you're not seeing any pivots on this chart as well. So euro versus the pound, where does that leave us? Leaves us with a game changer bar to the upside. Funny thing, we had a game changer bar last week that suggested we go down, the week before suggesting that we go up, and that means confusion to me. If I'm super or hypercritical, I'm seeing that level there as support. I'm seeing that as a potential liquidity grab, and I'm seeing price going to probably this level, top of the channel. I don't really have a strong resistance horizontally, though you can see that it has topped out a few times here, and it has been minimal support, resistance again. So I'm not expecting that there'd be too much of a rally there. Big boss, is that telling us that there's a directional bias here? Look, I think it is, and I don't think that direction is long by any stretch. We've got a very toppy situation here where price has rejected. Okay, we're nowhere near that level, true. But we haven't really hit the bottom side of that yet either, which is down here, not too far away. And I'd rather be trading this short than long. So the weekly game changer bar for me is non-tradable. Euro versus the yen, and the big problem with game changer bars, when I say big problem, you've got to line them up, and they've got to be contextually correct. They've got to be in the right position, and they have to agree with the big boss. But really, the key to them, to my mind, is, and that's why I've called them game changer bars rather than key reversal bars, is because they need to change the game. Duh. What does that mean? Well, if this bar here is suggesting that we go in a northerly direction, or we buy, which is what it's doing. So it's beaten, or well, sorry, it's gone lower than the close. Sorry, it's gone lower than the low of the previous week, and it's closed near its high. But is that changing the game? Where's the game? The game's here, right? This is the game we're playing at the moment. We're playing buy the euro versus the yen. So there's no way in the world I can agree with that game changer bar that says buy for that reason, but not only that reason. I'll be trading straight into the highs, which are telling me false, 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 false. They're all coming back into here. So the only direction I would want to trade that is short. So game changer bar is invalid, in my humble opinion. For that reason, is it in agreement with the big boss? Yes, it is, 100%, because we've got a big double bottom sitting here, or we've gone absolutely into, I won't say hyperplexy, because I don't know what it means, but it's in my brain somewhere. But this is super bullish, no question about that. And look, we've been saying for a long, long time that the yen has to get some strength behind it at some stage. And I fully agree with that. Is this the week? Maybe it is, I don't know. But this game changer bar is telling me buy, and it's in the wrong position for me to do that. So game changers go this way, not that way. That game changer there the week before was beautiful, but it needs to be backed up. I can't trade a one bar game changer when we're in such a hot market. So let's move on to pound versus the Aussie. Pound versus the Aussie is exactly the same. We've got game changer bar suggesting that we sell here, but that would be in accordance with game changing, except that we've had two bars to the downside. So we've got to have a rally first before we have a game changer to the south side. We've also got to have a reversal pattern if I'm to trade this short. So I just can't do that. I don't have a reversal pattern to start with. Yes, this could be a lower high, fully get that. But it's not in accordance with my rules, which say I've got to have a chart pattern that is a reversal before I can reverse. And I don't. This is not telling me go short right now. Love the candle, but if it was after a rally, then I'd be happy. And we had a lower high after a double top, bearish engulfing bar, evening star, something like that, then I've got something to work with. But at the moment, I've got nothing to work with on pound Aussie. Do I think it's the right direction? Hell yes, I do. But that doesn't mean I can just jump in. So I don't. Pound versus the Kiwi, exactly the same applies here. Yes, it's a game changer bar, and it's against the trend. Yes, get that. But is it telling me that this game is changing? No, it's not. This game is going on according to that bar, suggesting that we sell. And I agree with that 100%, directional bias. Yes, we have a reversal bar. It's a one candle reversal bar, but do we have a rally to give us that lower high? No, we don't. So for that reason, I have to stay out of this one as well. That said, what I do have on the daily chart is a game changer bar to the upside. Like this one. Why do I like this one? Few reasons. Number one, we've got a broadening price pattern. And we're pretty much at the bottom of that, coming off the bottom of that. We've got a game changer bar to the upside, agreeing. Yeah, actually, I didn't see that. Is it agreeing? No, it's not. I'm going to change my mind. I've actually got an order on this. This is a box range. And it's suggesting that this double top is going to produce a sell to the downside. I've just completely missed the boat. I didn't go to the monthly chart. That's not good. So the big picture, or the big boss, is suggesting that there's going to be selling happening on pound versus the Kiwi. That candle agrees with that. Yet it doesn't give me what I need to see. and I need to see a rally off the reversal before I can trade it. Is that happening anywhere? Is that a rally? No. 4-hour chart? No. I just can't trade that there. But if I get a rally, then I would certainly look to trade that. I'm going to cancel this order. I've got an order on pound Kiwi to buy above here. I'm going to delete it because of what I've just seen. So I'm admitting I was wrong, and I think that's important that you're willing to do that before you get into trouble. Now, I may be wrong that I'm wrong, and this could, of course, go long. But I've just seen something that's telling me that I'm horribly wrong here. So I've got to change that. Righto, and again, I'll remind you, it's this here. I mean, that's super, super bearish for mine. Super bearish. Yes, the one thing I would expect here is a fairly decent sell-off, maybe down to here, then back to here. Then I can look to pick it up as a sell. That's on the monthly chart, mind you, but bear in mind that I'm now bearish, and I need to see that little rally somewhere. A little rally could be looking like this. Price up to here, which would make my trade that I've just cancelled very good. Hit this or even break through it, then come back underneath it, and then I can pick it up. But this is a little bit iffy right now. So I better put that out to my group as well at some stage, telling them that's no longer valid. Did we catch up with? Yeah, no, we didn't. CAD Swissy still refuses to go through my entry. Today might be crucial. We have a close above the monthly pivot, which is good on the weekly chart, and this is the most positive bar in terms of decisiveness, if you like, that we've had for 2, 4, 6 weeks. So I'm going to read something into that. I think we're on the right track. May get a retracement here this week, and I get that as well, but nothing to do here. Just hold that position. Pound versus the CAD. Same applies, really. We've come off the double top. We're now trending, maybe expecting a pullback, maybe to the weekly pivot there that you see, maybe even to the top of the channel. I would get that. There's a bit of confluence there, monthly pivot, top of channel. If that were to be the case, I think we could even add to that position. I won't until I'm safe, of course. I'd like to hit here first. But I see that happening. So nothing to do here at the moment on pound versus the CAD. Cancel pound versus the Kiwi. We've been through the weekly game changer bars. My thesis for the week is this. As I've been saying for the longest time now, in fact, it was back here that I started saying this, which was in May, I think, that this box range would be with us for some time. And got that completely wrong when we based this level here, which is 103.50 odd, when we hit that and bounced off it. Can't remember the circumstances surrounding that. When I say got that completely wrong, I got the timing wrong. Didn't cost me much or anything, I don't think. But we turned into a false break, formed this channel. As soon as we came back into here, this was back on. We're not there yet, which is the key to this week, in my humble opinion. But like I said on Thursday, 1, 2, 3, 4, 5, 6, 7, 8 weeks of buying on the dollar, not just buying, it's pretty strong buying, is unprecedented for pretty much as far as you want to go back, as far as I can tell anyway, or as far as I've been willing to go back. So if I look at that in context, and let me get rid of that, this is the most important piece of context for me. Since May or even April of 2021, we've been in, it's not quite parabolic, but it's a very, very strong trend on the dollar index. Not once in that trend did we put 8 buying candles together on a weekly basis. And you go back pretty much as far as you like to the last time we rallied as well. 8 is just a bridge too far for me. I'm back in 2018 now. Go back as far as you like. Here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it's not unprecedented, but you've got to go back to 2014 before you see that again. And that did go parabolic at that time. So what I'm suggesting is, yes, it's possible. Of course it is. Everything's possible. Is it likely that we get another week of buying on the dollar? I think it's likely that we get another few days of buying until we hit this level. But I don't think it's likely that we're going to get another week of strong buying. So the thesis is, let this go to resistance, which is the top of the channel, the top of the rectangle, but also it's going to match that high as well, and this form a support level. So it's also a whole number around about 106. So I'm anticipating that we will see that this week at some stage, and it's then I'll start looking for shorts. Not now, because we have broken through that top of that channel and this high. So I think dollar strength maybe for a day or two this week until we hit that level, then I'll be looking to sell it off. So that's pretty much anything against the dollar, but not yet. I've got to wait till that happens, or till we get a clear false break of something. Maybe the top of the channel. Maybe this happens tomorrow. We get a buying bar back to here. That would get me interested to go short, but still thinking that we're going to here before we go down here again. That's my thesis for the week, and it carries pretty much everything against the dollar with it. So looking for pound dollar to continue short until this happens, euro dollar to continue short till this happens, Aussie dollar to continue short until we hit the top of here, then I'll be looking to sell them. Then I'll be looking to buy them against the dollar. That is my theory for the week. Whether it holds up or not, we shall see. It's only bloody Monday. Hey, Ash.
Hey, buddy.
How you doing, mate?
Yeah, going all right. I agree with you. I wonder whether we might get another boost in the dollar, but I also see a level here, and I because I agree with you about direction. I think this is going to be a bit of a challenge, where we kind of try and get in, and it might be we have to have a couple of nibbles at this before we get the actual trade. As you can, as you've pointed out, this particular trend line that you've got, prices is currently under that level, so we might actually start to test that level and then reject, from that particular point, which would mean the stops would go at the highs of that final green bar.
Yep.
And when I'm looking at this, because I'm finding it, if I'm honest, I'm finding it very difficult. There's what actually. Before we get into this, there's a quick trade that I think is a possibility.
Yep, sure.
And it's for the pound versus the euro versus the pound. So let's have a look at that. So you can see it here, euro versus the pound, and I would just like to see it just dip down just a couple of pips. Really, this was the area here, so I might even wait for that point there. You can see there's a trend line here coming along there. I can't seem to put an order in, and I don't know why. If this comes down to 73, though, I'm going to get into this, but I might have to do it manually. But I can't get my order in. I want to try and get my order in, but for some reason it's not going through. See if you can work out why. I've got a pending order. I've got my buy limit. I'm going to go in at 72. And I'm going to get the stop loss at 65, and yeah, I'm not able to place.
Spreads might be killing you. Are you too close to the market?
Maybe that. Do you think that's what it is? Yeah, it could be that, mate. It could be that. Okay.
I'm thinking that's the only thing I can see. although it's only 1 pip, isn't it?
Oh, 0.2. I don't know why I didn't get into that one. Let me just come in here and just see how much this costs. This is my biggest problem. Oh, that's not anywhere near enough on that. Why wasn't I able to put 2 lots on there? Let me see if I can build this up a bit. So 2 is 6. So let's put in 0.4. All right, there we go. All right, so I've gone long on that one. There's a 2 pip spread, so that's 70s. Let me just lower that down to 64, just to give me a pip below. There we go. So yeah, you can see that you know, we're going to have to need to get through this level here, which is okay. But the reason that that I like this, now you can see that this is only a 5-minute chart, of course. So this has got a higher likelihood of failing at this particular point. But you can see inverted head and shoulders kind of kicking into place here. And the other thing about this is that we've got the longer term time frame, which is really what I'm trading. You know, when I'm looking at this, I'm looking at this on a longer term basis, and the 4 hour is just kind of like kicking along at this particular level here. Just make sure that I've analyzed this correctly.
It is a weekly game changer bar as well.
Yeah, so the 4 hour is along here. Now the other thing with this is that weekly game changer. So for upside.
Yep.
Yeah, cool. So I'm just coming under this cluster, and you can see that you know, that really there's no inefficiency here, because this was the previous high before we collapsed, and we're just managing to find potentially, well, actually not potentially. So far, we're finding a little shelf here. We're finding a little floor here. So I'm just looking to see whether that floor will play out. Now, there's not a whole bunch of room to the upside, depending on where you draw these well, in fact, not depending on where you draw these levels. You're going to have to draw one there, or I will anyway. I'll have to draw one there, and of course this one as well. Now, if we look at that, which is why stops are kind of tight, but that's a 2-to-1. You know, if we can get to this high up here, that would be a 2-to-1 trade, which I'm more than happy with. You know, I don't know whether I would stay in this trade. The issue really, there's a few issues, but the issue with a pound to go down, or let's say making the case for the pound to go down. We've had Governor Bailey now come out and suggest that that we might be at the peak of interest rates. So that's kind of the first thing to consider. You know, do we get compounding of that particular narrative? And the compounding of that narrative will be formed if the data backs up some disinflation. You know, it probably needs to be quite extreme. I would have thought the disinflation would need to be sort of like relatively good and relatively aggressive to suggest that that the peak may well be not well, the peak could be in if it's aggressive. The peak could be close if it's tepid, but it's still, you know, we are still seeing disinflation. So we're waiting on that. We've got MPC member Pill speaking in about 30 minutes, so that might move this market. We've got an ECB. You know, if we think about now the pair, the ECB is due to have a rate decision on Wednesday. And there's still some uncertainty about what they're going to do. You know, their particular level of rates right now is sitting at 4.25%, which is still, you know, it's a whole percentage below the Bank of England, and also 1.25% behind the Fed. So they are lower, and yet their inflation issue is still greater than it is in the United States. But they've got some terrible economic data that continues to kind of put pressure on the ECB, and the chance of the ECB managing to raise rates does diminish because of that that pressure. So it's a bit of a balancing act, but we are we are at a level of support. I'm not saying it's the level of support, but we are at a level of support. Now, the next level of support is probably going to be all the way down here, which is why I don't mind coming out of this early doors, and then maybe even trying to get back into it down here. You know, I wouldn't be completely adverse to that. The other difficulty here is that the now when we look at this does need to take out this this level here. There we go there. But we can see that this, you know, we got inverted head and shoulders, but we've also got a potential higher low if this holds at this particular area here. So you know, the actual chart looks okay for some upside at this stage. Needs to take this level out, and if it takes that level out, then I would suspect we probably are going to the next area. Maybe that high holds it up, but I'd look for that trend line for a profit taking position there. The problem with this is the seasonal bias, because the seasonal bias for the pound is actually pretty good for the week. You know, when we look into the longer term, it's not that good, but for the week, it's actually pretty good. So that could also pay for this to this this particular trade, except for I'm not staying in that long. So there's a few kind of counter arguments for every argument. So that's the trade, mate. I don't know. I don't know whether it's going to work out or not. Of course, you know, I never do. And there's enough kind of suggesting that there could be the counter happen here. That it's not all that clean. But as I say, when you look at the chart suggests just another push up. So that's what I'm looking to do here, man. I'm looking to just to get another little break to the upside, take that trend line out, and then I'll probably just leave the trade and see if it can do its thing. I can probably I can't do a lot with this area because it's not a great entry in as much that I can't put stops at break even without the trend still being in existence and possibly taking me out. But what I could maybe do is just shove these up right under this bar, so I maybe save a couple of pips if it does decide to turn around. The G20 I thought was interesting, mate, over the weekend.
Yeah, what happened?
Well, do you know, because we're seeing a bit of risk.
Sorry, before you go on with that,
yeah,
I would have thought that there was a holiday in the States today, which of course is later today. Is that not the case? I can't see it on Forex.
There is not a holiday. No, the holiday was last week. Labor Day was last Monday.
Yeah, no, it's 9/11. So I thought that
of course
they pause on that.
Yeah, not according to the places I'm looking at either. So there may well be one, but it doesn't look like it's an official holiday.
Okay, sorry, interrupt.
Yeah, so the G20, interesting, mate. Do you know I think the most notable thing that I kind of got from the G20 was the lack of condemnation of Russia, and where I think that's quite interesting is that if the G20 aren't condemning Russia anymore, it suggests that they don't see the threat from Russia anymore in their, you know, because they're not really fighting for Ukraine. You know, of course, the sort of like the narrative is, you know, from the West that they are the saviors and they are the global police, and they want to make sure that there's you know, any injustices kind of get mopped up. But that's not what this is about, from what I gather. What this seems to be about, what this appears to be about, is encroachment into NATO. And they don't want encroachment into NATO, and they're getting very close to. So that seemed to be sort of like what the Ukrainian counteroffensive was mostly about. And for whatever reason, they're not really seeing the threats. Now, I don't know whether that's because financially Russia have been hit so heavily that they probably won't be able to continue. If they did manage to seize Ukraine, they won't be able to kind of continue with anything else that's too aggressive, or whether it's something else. I don't know. But the fact that they weren't condemning him, I thought the language was quite telling and quite significant. It would suggest to me that the threat is not there. Now, if the threat is not there anymore, does it also mean that that Russia also start to play ball a bit more with the West, and they say, okay, we're not going to play any, we're not going to do kind of anything too nefarious to the energy situation when it comes down to winter, because that was the big problem last year, cutting off Nord Stream and all this kind of thing. So if they don't play, if they don't sort of utilize their power in the energy market, then it also takes the pressure off the likes of Europe, particularly, and therefore the rest of the globe. And I suppose if that was to happen, if all that kind of starts to take effect, then there is a chance that we actually start to see some growth again, and we start to see inflation diminish further, and we can sort of, like, you know, start to look at some of these risk-on scenarios, and that's what we've had this morning. You know, if you look at what's going on in the UK market, the FTSE 100 has had a really good boost overnight, really, and continues to the upside. The US, the Nasdaq managed to kind of find a low on Friday, and that's also starting to ease to the upside as well. Same with the S&P. So it looks like there's a little bit of risk kind of come back into the market, and with that risk in play, it suggests that that things aren't so worrisome and things aren't so concerning. And whether that continues, I don't know, but it does suggest that any retracements in the likes of the S&P, if there's not this kind of broader picture going on where uncertainty about inflation because of the conflict is still a cloud over the markets, then retracements will probably be picked up at this particular point. You can't trade it here. You know, it's kind of, there's still a possibility that this turns around and comes down. We see that there is this head and shoulders pattern that looked like it was in play on the S&P. And on the Nasdaq as well, but it's possible that this has just put pay to that. You know, now we've got a higher high and a higher low on a daily, and it might be that this whole area here just needs to get blocked out, and we're in a completely different phase. And actually, looks like an inverted head and shoulders possibly kind of coming into play now. So I wonder whether the market may actually turn around on something else here rather than what we were initially looking at. That puts the Aussie back into play, that puts the Kiwi back into play, and it might even put the Euro back into play if we start to see that growth kind of come through. The pound, as I say...
with that, as I was pointing out before, the 8 weeks in a row that the dollar's rallied.
Yeah.
You know, that pullback is overdue. Yes, it's overdue. I'll put it that way. Yeah. So it wouldn't surprise me at all if that is true, what you're saying. The one hesitation I have with that is that the dollar hasn't quite reached the level that I thought it might. It may not, of course, and this may well be exactly what you're describing. I'm just a little bit dubious on that because of the dollar hasn't gone as far as I anticipated. But it's due. It's absolutely due.
Yeah, I totally agree. And if we look at the dollar, and again, I mean, I'm going to have to look at it against the euro for right now, but you could look at it against the Aussie as well. Decent. I mean, look at that morning that we've had on the Aussie. This is we're only 8 hours into the day, and the Aussie is just what's that rally? That's a 60 pip move already. So it looks like a near 1% move on the Aussie. So if that risk-on narrative is kind of coming through, it looks like the Aussie may well be the one to kind of look for. The Aussie and the Kiwi may well be ones to look for.
Interesting that market sentiment situation, because did I read somewhere that the BOJ has stated that they look like coming out of negative interest rates? Did I read that
think
somewhere?
So. Yeah. I think you did. And
so that's going to be hard to manage, because that would suggest strength in the yen.
Yes, it would. And it could be that the pound yen is already weakening. And I guess the European currencies are weakening as well. Euro yen is also weakening. So the yen has always been, it should really be on everybody's watch list. And purely for price, purely for the fact of price.
We've been saying that for a while.
Yeah, I mean, it's just the moves here in the yen against just about every other currency are so large that that coming to the downside and rocketing to the downside eventually is there. The problem with this one is timing it, and the reason that timing it is an issue is that if you hold something with positive swaps, but with positive interest rate differentials, then you can hold on it without it battering you. Over a long period. It looks like that euro pound's not going to work out. It looks like the interest rate differential is not going to batter you. The swaps aren't going to batter you. But the problem with it is that if you hold on to this for any kind of period, which, this is a monthly chart, so it looks like you could be holding on to it for 4 weeks, maybe 8 weeks before it comes down to here. The balance in it is so poor that that if you don't get a genuine move, then it would appear that the trade would just be swept away. It's just not going to kind of work out at all. So I don't love going long on the yen purely for that reason. But intraday there might well be opportunities, which means you can actually you don't have to worry about the move. The move can happen, and then we can sort of take some bites out of it. Trying to actually sort of, get in before the move, very difficult, as I say, because
very difficult. Yeah.
You're going to need to hold on.
Potentially extremely lucrative, but very difficult.
Yeah. I'm just going to have a look at this euro pound and see whether it's worth closing out this position, mate. Let me just see. That doesn't look so good. That doesn't look like it's holding there. Let me just see what this line suggests. Ooh, that's going to get close. That's going to get close. Might just leave that on a minute. And you see, I don't like it when the pattern I was trading collapses. Even though this is still got a chance to kind of go on up. This is where I was expecting, and I'd almost prefer to kind of close these positions off. So I might do that, mate, and close under there. It's not going to save a lot. Yeah, let's close this out. Let's close this out and not worry too much about it. And we'll come back to fight another day and not worry about that particular trade. Really, when it comes down to this kind of thing, it's suggesting to me. Now, I don't mind trying to pick this one up again at some point, but not right now. What this is suggesting is that because of the moves we've had this morning, there's not really a lot you can do, because these are all now closer to the kind of sell zones. Look at that on the FTSE. It's right on the sell zone, really. But considering the narrative, I wouldn't really be that comfortable about trading it short. What I prefer is for a pullback and then try and get in on the long side. But the pullback is going to have to be relatively deep, and when we're looking at more than a 0.5% move to the downside, I'm not sure what's going to create that at this particular stage. So I'm not sure whether we're going to get much today because the move's already happened.
I'm going to say it's Monday and they've come out of the blocks very early.
Yeah.
And I don't expect, the way I look at the market anyway, is Monday is not necessarily something I want to jump in on momentum, definitely. No. And if the moves have been made, then I'd much rather be trading against those moves than with them, frankly, on a Monday, definitely.
Yeah. Do you know what, mate? It's one of those, isn't it? This is a Friday trade. This is not a Monday market. This is a Friday's market. This had the spillover, and now you've had the kind of explosive moves to the upside. You're kind of done. Obviously trying to pick that euro pound up was more about seeing a market that hadn't really moved. But that now looks like it's going to it's not going to play out either. We'll see what happens maybe later with Pill, but all of us, now I'm kind of I'm washing my hands of it, and I'm not really that interested. I couldn't find that much anyway. So I do notice George is in the room though.
I see that. Hello, mate.
Gents, how you doing?
Yeah, good. How are you, George?
I'm top of the world down under, mate, as usual.
Beautiful, beautiful. No, we're doing well. We're doing great. Good start to the rugby, but we're fine.
You did have a good start.
I have to take another bloody subscription to watch the Rugby World Cup. Would you believe? I've got 14,000 subscriptions. Now I've got to have another one.
Oh, that's
what
evil.
the hell?
That is evil.
It's ridiculous. It's terrible.
We've got
Excellent.
we had a good win as well, actually. England had a good win. 14. They had a man sent off, and they overcame Argentina. I know it's not one of the major nations, but they still managed to chalk up a win. So I think it could get interesting. This World Cup might be a bit more competitive.
Yeah, I mean, it's still a bit early. I was saying to my daughter, she said, "But you're not so excited." I said, "Well, I mean, I'm gonna get excited around middle of October, into the quarterfinals.
Yeah.
And all that. There's just so much to go now that I'm not good at following, so early in the season. But I mean, it's just because South Africa was playing. I didn't even watch the full match, to be honest.
Oh, you didn't
So-
know? It's difficult, isn't it? I mean, I love World Cups of any sport, but it is difficult to kind of find the time to watch every game. In my youth, I would sit there and watch everything. Quite happily watch all the games.
Certainly the season for it. We've had the female football World Cup. We've got the one-day cricket World Cup coming up as well. We've got the Rugby World Cup happening at the moment. We've got the Ryder Cup in golf coming up in the next couple of weeks.
Yeah.
My goodness. There's a world championship of drinking red wine coming up that I'll be attending next. Just
do
kidding.
well in that.
I've been practicing.
Excellent. Well, I mean, I was just listening to what you were saying, and you're quite right. I mean, this move up has already happened, and let me just put up just this DAX theory here. I mean, when I started looking at it, I mean, this is an hour before the UK, so I kind of think of it as that whole hour up to when UK markets open. You might get some moves, you might not, but the key driver is when all the markets open there at 9 o'clock candle for me. And I kind of
Price loves that EMA, whatever it is, mate. Gee whiz.
Yeah, I mean, I was looking at it right from. I mean, this was all into the just at the end of the call it still the Asian session, I suppose. The strong move up, holding above the 10 EMA, and when you had that, makes it difficult to buy. And I kind of thought, well, that could have been a decent signal. But my problem was we're right at that green line, which the high of Friday, with this failed breakout above it. So a little bit hesitant. Then we had that. And when that first candle opened, the UK market said, well, let's see if the bulls are strong. So when I close up here, then that kind of gives you good motivation to jump in and keep your stop down here. But then we had a doji, which is a bit of a problem. But still tested the 20 EMA, tested the high of Friday, and we still started going up. So, when the price was coming up here, I mean, it's one of those where, you kind of know you don't want to buy above the trading range, but you're saying it might just pop up strongly, and let's see what happens. So, I had to chew and do whatever, but I didn't put an order in because I know it's not something you do. You don't want to do that. It could go up, come back, and just stop you out. But then it went up, and now we're kind of pulling back. So, I'm thinking this, or what do you call this measured move? That's a measured move off that doji, which complete trading range. If you look at all the price action to the left, that's where we got to. So maybe that acceleration up was just to test, that. So, you could have bought above that if you're able to get out quickly, but that's not something I do. Now, what I'm thinking of is if there is still a lot more high to go, a lot more to go up. I mean, if I look at this, that's really the breakout candle above that trading range. But the follow through was weak. And then we got an immediate reversal in that measured move. So you know, unless I get like maybe a higher low double bottom somewhere within here, so we get a reversal off the 10 EMA, let it, you know, go up. But let's see how much strength the bulls have, and if we come back and create, you know, another double bottom in this same kind of, let's do this. So I'm thinking maybe at the EMA there. So I don't know if we're going to test that. But any failed breakout here giving us a reversal, I'm not going to buy the first one. I'll have to wait to see if we get a double bottom. If we get a double bottom, then maybe a little bit more up to go. So that's kind of the thinking as far as the bulls are concerned. We've done all of this. Only a higher low double bottom. You know, it's what I'll be interested in to get in. That would also help with where to put the stop. So, you know,
Yeah.
if you wanted to buy this, I mean, the stop is still going to be somewhere down here, right? But if I got this goes up, comes back, and gives me a double bottom, then I can have a tighter stop.
That's the problem in it, George, and that has to be a consideration. You know, if the trade's going to cost, even if we have a bias in one direction, if the trade's going to cost way too much to satisfy that bias and see it play out, then it just becomes completely pointless. You know, because you take 10 of those and you lose a couple, then you're right back to square one, if not slightly down. So
Yeah.
so finding the right price action to kind of enter into this at a high price is going to be really important. But yeah, the market has you know, it's opened up hot. I think there's a reason for it to open up hot as well, because I don't know if it's about the G20, but I do think that has changed the kind of the mood music a little bit in the you know, in risk assets. So I wouldn't be surprised at all just to see this market kind of continue to the upside without an opportunity, which is really why I was saying that I think I might be washing my hands of this this market today.
Yeah, I mean, if you ever look at, so I just want to make sure this doesn't mess up when I go up to a higher time frame. If you ever look at the daily, I mean, that's just, I mean, that's move red already. But if you look at where we're coming from, I mean, all of last week, if you're looking at the markets, you probably would have seen the same thing on the UK 100. It was like selling off early in the morning. By the time we come in, then we get reversals and buying, bulls coming in. And sometimes, I can't remember which day, to go up, come back, and then in the US markets to go up again. So there's been a lot of reversals, price action. You know, at some point, all of these were strong bear candles.
Yeah.
And then bulls will come back into the market. And you know, I'm always kind of asking myself, if these bulls are strong, you know, why do we end up with dodges? Okay,
yeah,
because it means that, you know, the bulls are probably stronger. You know, that's why we're getting this, but we still have bearish price action. So now, looking at it today, when I opened up and I saw the acceleration up, I'm asking myself, well, I wonder how different is today going to be in terms of you know, reversals price action. So maybe we might go up, and there might be some form of a reversal base coming in, maybe to test.
that's what we want, isn't it? Yeah.
Yeah. So that could still happen. Then we can start to see, once we get down here, if the bears are strong, you know, they're just going to keep going down. If the bulls are strong, we could probably get a cleaner entry of that test. You know,
Agreed. And you know what? Interesting you saying about the dynamic of what's been happening in these markets, because the morning, as you say, has been a bit of a sell-off time period, and the afternoon has been a buying time period. So the way it looks right now is, if half of that particular pattern continues, the afternoon could still be a buying period, and now we've got the morning as a buying period. That would suggest that we could actually get a bit of a potentially a bit of a breakout. You know,
Yes.
maybe not above that green high test bar, but certainly of the trend line. You know, certainly of the trend line running from the 14th of June down, we could actually sort of like get a breakout. Yeah, we could get a breakout of these particular levels. Inverted head and shoulders is in play there as well. So it does look like there is a accumulation pattern going on. So yeah, I wonder whether we get the second half of that pattern. First half, no, because we can see it here, but the second half of that pattern play out. But when I look at these, I just kind of think, well, okay, at this current phase, unless it tests last Friday's high, I'm not interested. The next time I will be interested is if we break out of the trend line and test that area. So until I kind of like form the base, then it's, you know, I'm not interested in sort of like taking sort of parts of the market, even if it could make some money. It's just not. It's just, it doesn't seem safe enough to me. It doesn't seem any value. You know, if we break that and retest, fine, I'll take that, no worries. But right now, this is in a sell zone for me, and I'm not interested in selling because the market's, you know, it appears strong. And I think, as I say, that G20 meeting may well have kind of promoted some upside for the day. But coming down and testing that high of Friday, then I'll be interested. You know, that's the only point I'll be interested in this current phase. But
yeah, what's interesting, I mean, I agree with you completely. I mean, if we don't get a strong, you know, double bottom buy signal here, and the bears are going to test down here, you know, they might just test in the same format they've done here without giving us any way to jump in. But another way to look at it, which if we start to get that may cause me to change my mind. If we start to get strong bear candles, full bear candles coming down here, and then the bulls resume, but we get lower highs, and the bears start coming down again. When they get down here and break, you know, break back into the range of Friday, but with strength, you know, it might be saying to us, there's possibly a bit more selling until we get to that US session in the afternoon where we start to get reversals. So, you know, depending if you want to, you know, trade, I mean, like last week, you know, you could go with it down and come back with it up to some degree. But right now, it's not decisive, you know.
I suppose this is where the difference with technicals and fundamentals, you know, approaches come into play. But because my kind of thesis is all about really what's driving it, the sentiment from the fundamental data and I guess kind of global perspective, I've got little question that I would want to trade long. Because I think that the mood music, as I say, has potentially changed. We've had some numbers out of China today which were less bad, and that would suggest to me that the bulls have got a case to be made for upside. So that's why when I look at levels, I think, well, okay, well that's an area that the bulls will probably come into play, and because the sentiment to me is up, then I won't wait for the price action in the same way that you will. You know, I will just kind of like quite happily buy that zone. If there's value, you know, if I've got enough value between that zone, the stop loss and the target, then I'll buy that zone and see what plays out. And I guess this is the thing. This is the beauty of the market, isn't it? About sort of how different traders can maybe look at the same area, but actually be having a different reason to kind of get in at that area.
Speaking of which, as a different trader, George, can you go down? What time frame is that, mate? 5 minutes, is it?
This was 5. I was on the daily. I came down to 5. Yeah. Which one do you want me to go to?
Probably the 5. Is that the 5?
That's the 5 now. Yeah.
Okay. There was you wouldn't have been on a smaller time frame. So let's go up to the daily then. No, was there one in between?
I did the 5.
Oh, no, there we go. That's it. So the way I look at that chart right now is everyone who is short. This is the daily, right?
Yeah, this is the daily. Yes.
Everyone who was short since last Monday, by the look of it, has now just been hammered.
Yeah.
Everyone who's long at the moment is looking okay. But if that candle reverses, because there's now a liquidity grab there on those last 4 bars, they could also be hammered out here. So really, to my mind, I've got to work out where these big boys are right now. And to my mind, they're short. But as you are also both correctly pointing out, that creates an issue because of the EMAs, because you've got a double bottom there and a higher low. That's a problem. So actually getting into the market here, as you both is extremely difficult. So you've just got to wait for your setup, I suppose. And mine would be seeing a false break of that trend line that you've just got on your chart. If I saw that, or even a break and retest, either way, break and retest gets me long, break and false break gets me short. And that's the way I would look at that.
Yeah, I like that, mate. I mean, to be honest, I'd be out by then. I wouldn't even be worrying about that area. That's what I'd be hoping, actually, for us to get up to that point, because I'd be looking to try and get the long above yesterday's high. Oh, sorry, Friday's high. That's why we're looking to go long, and then see if we get up to that trend line. I'd look to get out and then let the fireworks happen in that particular zone.
You'd have to be in now, right? You would have been in the market now. I
would have either been in the market or I need to pull back. I needed to pull back before it gets that trend line.
Okay, gotcha. Yep, yeah, gotcha. Okay.
So yeah, but whether it gets back a 1/3% drop, I don't see anything on the horizon which is going to drive that. We're quite light on data today, which usually suggests that when we've kind of gone into a move, if anything, we just fluctuate around it. You know, when the move happens, we just kind of like remain around it. But you know, there could be a bit of a dip in the US market as the you know, those guys come back on. I don't see anything else this morning. We got as I say, MPC, the Bank of England member Philip Pill speaking in a little while, in about 2 minutes. So he might drive the pound, and that might kind of put sort of a different complexion on the FTSE. Maybe it sort of changes a little bit with the German the DAX as well. I don't know, but yeah, for right now, I just look at it and think, okay, well, the move's been done. The bulls are probably going to try and defend their particular price points already. And the bears might wait until that trend line before they sort of see a genuine price point to sell off aggressively at. So yeah, it's a bit of a wait and see for me right now.
Yeah, it's a cool chart. I like it.
Yeah, you're enjoying the DAX, are you, George?
Yeah, it's interesting. It's actually got a lot more moves, if I can put it that way, momentum than FTSE.
Okay.
It tends to have, whether we're going up or going down, if it's a bull trend, tends to go. If it's a bear trend, tends to go. If it's a trading range day, you can get, 2 or 3 small trends in the day: bull, bear, bull. So if you miss out on anything, you come back and have a look. Unless like it's moved already, you typically can find a few entries.
Cool.
It's just, it's something which I've never really noticed with it, which is what I'm finding quite interesting. But I mean, those flat moments are pretty boring, right? When it's just going nowhere.
Yeah.
When you get that trading range, that's why you see some. So I put up gold just to have a look at it. Gold has done some moves already. So, but I've in the past couple of weeks, I just put up gold. So, instead of sitting and walking around having coffee, have a look at something else and see.
Yeah.
What might come up. So I don't know. We'll see how that goes.
Yeah. Well, the gold chart's interesting, isn't it? I mean, the whole thing about gold's really interesting, and it really does depend on how we feel about the dollar. And actually, I don't know if I said this earlier, Jeff, but when we were talking about the dollar earlier, this is where I would probably come. You know, I'm not, the other currencies kind of like make me a little bit nervous for different reasons, but gold is a bit more, it's a bit clearer. You know, if the dollar comes down, gold will go up.
Yep.
When you're looking at the other currencies, it's kind of, you know, in some respects it can be a race to the top or the race to the bottom, but this one's just a bit clearer, you know, in the effect of what happens with the dollar. So I like gold. I don't like it on the longer term charts is my issue with it. I think, you know, the technical levels or the technical picture longer term is not that favorable. It looks like we're more likely to kind of be pushing down than up. But at these points, I quite like it, and really this comes down to whether we believe the Fed is likely to pause again next time round, and if they do, dollar will probably, you know, it's likely to come down, and gold is likely to go up.
But not yet. That's what I'm saying, and that's my thesis for the week. Dollar still goes up this week.
Yeah.
But I'm a seller of as soon as it gets to that level that I spoke about before.
Yeah.
So I'm still expecting downside for gold this week until the dollar hits that level, and then I'm looking probably to not necessarily gold, but I think I'm looking to buy the Aussie. I'm looking to buy not so much the Kiwi because it's the same trade, but the euro. I'll be looking to buy the Aussie. I'm looking to buy the euro, but it's not yet for me. I've got to wait.
Cool. All right, nice one, gents. Well, we are at the top of the hour, so thanks for popping in, George. Always good to see you, mate.
Hang on. That's my thesis for the week. What's yours?
Well, my thesis for the week is it does kind of depend on what happens with the ECB. You know, the ECB have got their interest rate decision, and I wonder whether that might define what the others do as well. So I think, you know, the ECB sort of in the current position is an interesting one, but I'm looking at risk on. You know, that's where I'm at this week. I'm the same with you with the Aussie, probably with the Kiwi as well. Bearish on the pound because you know, I think that the narrative's changed in the UK, and I think that they just need to see some bad data to suggest that the disinflation is coming. And I think we've had quite a lot. You know, we had sort of house prices starting to diminish quite significantly. GDP is out on Wednesday, and that might also show some weakness in the UK economy. So I guess the bearish pound scenario is my favoured of all the currencies. That's the one that I'm more comfortable with. But yeah, a bit of upside in the Aussie and the Kiwi, I think is also possible.
Okay, haven't mentioned the CAD. We're both invested in the CAD.
We are invested in the CAD. I'm trying to keep my eyes off the CAD and leave that trade do its thing. I mean, yeah, risk on would play into the CAD's hands as well, and obviously some risk on would potentially diminish that Swissy. So the CAD Swiss still looks like a decent position to hold on to my mind. I think that there's potentially a long way to go with that one, but it might still fall short. But if the G20 has really changed the dynamic of how people feel about the threat from Russia, and Russia don't flex muscle in the winter, I think we see the chance for inflation to sink down even further, and I think that does put those risk-on currencies back into play. And I think the likes of the CAD could do really, really well. And the next 6 months could be really interesting. And if that continues to play out, then I think the CAD could hold up mainly on that. You know, more on that than any data that Canada releases or any data that Switzerland releases. I think that we could start to see those. And you think about the Swissy. The Swissy is well overvalued right across the board.
Yeah.
And I think some of that is because of the threat that people have seen from escalation between the West and Russia. And as I say, the G20's tone was suggesting that threat may be just starting to dissipate a little bit, and we could see the Swissy really weaken over the course of the next 6 months, and maybe even further into the next 12 months. Who knows? So CAD Swiss I still like, mate, but it's still so early in its move that that I'm not getting too excited. But it's doing okay right now, isn't it?
Yeah, I think I'm back to level at the moment on that one.
Nice.
But pound CAD is the one I like, and you seem to agree with that thesis as well.
Yeah.
George, what's your thesis for the week, mate? Change from coffee to beer, right?
Yeah, it probably would be. I mean, I'm still, if I look at the market, the DAX 30, I still think there's, and gold as well, like you touched on, there's a lot more selling to come. But the question is just, when is that going to trigger? And I think today is going to be a decisive day. This move that, we spoke about, it looks like it's weakening already. But we need to see if we can get back beneath that high of Friday. I don't think the bulls will be able to sustain the rest of the week. So I'm still I will be bearish unless something dramatic happens in those markets. But I got to wait a little bit. But I'm definitely thinking bearish.
You're the same as me, mate. You're on my page. Happy days. Let's see if that works out. I want to see gold maintain that rage today, so I can get in underneath it tomorrow. That would make sense to me. Anyway, let's get the heck out of here. It must be beer o'clock at your place, George, surely.
Sorry, I didn't hear that. I was looking at gold. Say that again.
I said, it must be beer o'clock at your place, surely. It'd be lunchtime, wouldn't it?
Oh, no, not yet. It's only 6:10.
Oh, well, you know what they say, George. It's 5 o'clock somewhere.
Yeah.
Have a great week, guys. And those who have joined us, thank you for being our trading buddies. We'll see you on Thursday. Catch you later. Bye-bye.